Okay, so we're starting with almost 9 people. So let's go back to the previous class, in the previous week. In the previous week, we learned that how to learn from the different pundits. Okay, I mean, ultimately you have to take a decision, but there will be various sides. We'll repeat this one, but anyway, we have discussed about the wonder of the SIP, that means systematic investment plan. And then we talked about that overall, if you start investing little amount, not in a bulk, even if you have money in your bank, so you spread the distribution of the investment over a period of time. And then the most important parameter is that you have to monitor the performance regularly. So you have to monitor the overall performance, you have to monitor individual stocks performance, and how to do that in Excel I have shown you. And you have to also maintain the trade book. That means for each and every buy, whether this is going under loss, because you cannot expect that all of your stocks, whatever you have invested, will be giving a good result, because ultimately it is a subject of prediction, and many of your prediction can go wrong. So for any particular stock, you have to suffer a loss up to a certain degree. And if it is beyond that, you have to exit from the stock. So we also understood what is called the CAGR, or the cumulative annual growth rate. That is the sole factor to decide about the performance of your stock. Okay, and we have also shown that how to calculate about this, the CAGR. We knew that ultimately the success will matter on how you control the emotions. You have to follow the principle whenever stocks prices are very high, and you feel very proud that you are proud owner of so much of investment, your CAGR is at the peak. But when it starts falling down, you slowly feel very much depressed, and sometimes you caught under fear. Many people, they exit from the total stock market with a very shock, and they write the lessons learned, never enter into any stock market, which is actually wrong. Okay, stock market will operate like a cycle. Go up, it will go down, and you have to control the emotion. Rather, you have to come out of the depression, and finally the hope will start. We know that how to control the emotion, and many people are having the false hope. Whenever the stock is falling down, they fail to exit, and then they have a false hope. Okay, so typically there are bad times of the companies, temporary bad news, and it may be rather a good opportunity for many of the investors to actually enter into the stock market. Okay. So now we will start a new class, and hopefully I will be able to finish very fast. Okay, so the thing is that you have to be a little bit aware of the income tax. Obviously, the income tax rule from country to country is going to be different. So here, I'm going to explain you in short about the impact of the stock market. I don't know how many of you today, in the morning there was a presentation by our HR team, the human resource team. They explained about many retirement benefits. They explained about the provident fund, okay, or the retail benefit. They mentioned about the pension scheme. So you should be aware of that. I mean, this typically the investment in the stock market. I mean, I have presented with the scenario that it is a long-term investment. Obviously, you can make a lot of money if you go for the short-term investment, and you have to be careful about the stock. One important thing is that might have noted today that a lot of people, they depend upon the pension. So in India, the pension is fully taxable. That means whatever you are investing or the provident fund, and 2/3 of the provident fund amount has to be kept as a pension with the LIC, Life Insurance Corporation of India. And whatever pension amount you are going to get, it is fully taxable. That means if you are in the 30% tax bracket in India, whatever pension amount is you are going to earn, 30% is going to be paid by the tax. But for the stock market, it is not like that. Stock market investment has a special advantage that there can be two types of the what you call investment. So the first is that FIFO rule. That means fast in and fast out. Okay, how do you explain the FIFO rule? The FIFO rule is that. Oh, able to hear me? I think there was a temporary disruption.
Yes, it is visible. It is audible.
Okay, okay.
Sir, there is some disturbance, like it is distracting, or it's not clear sometimes. What are you speaking? Is it only for me or for everyone?
For us, it is clear.
Yeah, it is
Okay.
clear. Yeah.
Okay. See, let me explain with maybe very this. Okay, suppose you are buying a stock at a 120 rupees price. Okay, and say today is, for example, the first, say December 2019. For example, you have invested on that particular day 120 rupees. Okay, and the nature is a buy. And then suppose you are going to sell it, and how many quantity you are going to buy at a CMB, that means the market value. Okay, the nature is the buy, and the total number of the stocks, suppose you have bought 10 number of stocks. Okay, you have totally invested this amount multiplied by this amount. Okay, now suppose after some time, let's say example of say, sorry, let's say 22, you are going to sell the stocks, but not all the stocks. Let's say example 6 number of stocks. Okay, and at a value of say 140 rupees. Okay, so the stock selling will be considered as a FIFO rule. FIFO rule, first in, first out. So in the first in, first out, now you have entered 10 number of stocks. Okay, now in between, let's example. Now example say 25 rupees, say you have bought the stock and you have bought say 40 number of stocks. Okay, and suppose you have sold 12 number of stocks. So what will happen? Now this 12 we have to split into 10 plus 2. So the 10 number, what you have to basically for the calculation, what you have to do is that you have bought the 10 stocks, and then you have bought the first, you have to bought the 10 stocks, and then you have bought 2 number of stocks. Okay. So you have totally sold 12 stocks, but the first stock you have will be corresponding to this one, and the time gap will be I mean 3 years totally. And then this one will be considered from this lot. And accordingly, the time gap you have to calculate. That how much is the time gap between this and this. So accordingly, your short-term and the long-term capital gain will be applicable. If the stock is purchased more than 1 year, then you have earned a capital and long-term capital gain. For example, for this case, you have purchased at a price of 120 rupees and you have sold at a price 140 rupees. So you have made how much? 20 rupees per stock again. Now, the total, because you have sold stock, total 10 numbers, and so total you have made 200 rupees profit. Right? So these 200 rupees you have to keep in somewhere, you have to note it down. Like that, continuously, whatever is under LTCG, that means long-term capital gain, you have to keep on adding all this. For example, from another stock, you have made 500 rupees. From another stock, you have made 700 rupees. Now, in a one financial year, you have to add on this and then calculate totally how much you have earned. If this total amount is more than 1 lakh rupees or 0.1 million Indian rupees, then only you have to pay the long-term capital gain, which is really very, very huge. Okay. So generally it does not happen like that. Now, for the short-term capital gain, interestingly, there is, you will make in short-term capital gain is less than 1 year. In some of the stocks, you will make profit. Some of the cases, you will make loss. In fact, before 31st of March every year, sometimes it is deliberately, you can, some of the falling stocks, you sell it, you wait for the few days, okay? And then if those stocks are running under loss, better to sell with the loss and wait beyond the 31st March, then again, you can invest in the stock. The advantage is that, for example, let's say you have made this one 700, this one, and the second stock you have also made 700 loss. So you have made total 1000 rupees loss in a financial year. Now, while filing the income tax return, you can file this one as a loss. You don't have to pay any money on the loss, okay? And the capital, the total short-term capital gain will be adjusted against the loss. If the total loss is negative, you can carry forward to the next year. That is the most advantage. So in the next year, suppose you have made some profit, you can adjust against previous year's loss. Such loss can be carried forward for consecutively 8 number of years. Remember, 8 years. So this is a huge advantage. So sometimes in the rising market, you will make a lot of profit and you can adjust with the previous year's loss and then avoid paying income tax. This is the greatest advantage of the stock market. Just a minute, hold on. Yeah, sorry. So this is the advantage. And then let's go back to the PowerPoint slide. You have to also consider the effect on the split share and the bonus share. I have explained earlier, many times company goes for the split of the stock. That means in Indian market, the first stock will be floated with a 10 rupees. Okay. So whenever there will be 10 rupees stock, and then, for example, a company decides to split into 5 rupees. So suppose you are holding 100 100 number of the stocks, and then suddenly one day after splitting, you will see that you are having total 200 number of stocks, because the stock, the 10 rupees stock is split into 5 rupees. Now there will not be any tax impact out of the split share. Okay, there will not be. Hello, somebody. Just a minute. Yeah. Okay. But there is an impact on the bonus share. What is the bonus share impact? Let me explain you. The bonus share is like that. For example, you are holding, suppose, the 10 number of the stocks, and suddenly company will decide that 1:1 bonus. That means it will give you another 10 stocks additionally, and you will get it free. Okay, there is no price for that bonus. That means it is a bonus stock. So you have bought the stock at the 120 rupees, and then after few days, you will see that the number of the stock is going to be 20 rupees. And the market price may fall down. For example, currently, after a few days, the stock price was 125 rupees. And you will see that there is a price adjustment, and then the stock price will fall down. So this one divided by 2. Okay. So 62 rupees, 0.50 paisa. Now you can sell few of the stocks. Now by selling few of the stocks, actually the total number of the stocks, it will be jumped from the 10 to 20. But from income tax point of view, because you have purchased at 120 rupees and you have sold the stock as a 62 rupees, you will basically make some losses, and you can show the loss. That is one of the advantage. But if you sell the bonus stocks, again, it will be treated as a what you call FIFO. So the bonus stocks, you have not purchased anything at a zero price. If you sell the bonus stocks was purchased at a zero value. Okay. And then if you are selling at a 62.5 rupees, in that case, you have to basically book the profit. This is a huge amount of the booking. Okay. Now, this is the impact and the difference of the bonus stocks. Am I clear? Any question is there? So, selling bonus stocks, it's little bit, what do you call, dangerous. You have to think, because it will be huge impact on the, what do you call, in the capital gain. Okay, let me go to the next one. So, tools. As you know that you can make a lot of money in the stock market by paying, taking the advantage of various tools. I've shown one of the these things about the chart nexus. I've shown also the Excel sheet. With that, you can do. There is a good technical tools available. There's one thing called Market Gurukul, and the Market Gurukul, it gives a lot of the chart. You can use that chart analysis. Okay, and it's a fairly rich thing. Many people use it. But what I found interestingly, you can apply this one. The what you call Fibonacci, I have not explained. Okay. That is one of the very powerful these things. If I get time, then I can do, and then you can add many things. You can add Kijumuku and other things, and these are very good immediate things. In fact, if you visit the YouTube, okay, this is the YouTube, and then Market Gurukul, all this, there is a what you call beautiful presentations, and many of the present. So you can go to various this thing, and then you can watch those videos. Market Gurukul gives a lot of good things, and then you can take a lot of advantage. And then I have shown you about the charting.com, and the charting.com also you can use. You must be remembering.
Devanjan,
Yes.
these tools can be installed on the official laptop. It is okay, or it is
You can use it as such. There is no vulnerability in the tool. I have checked it. Okay.
okay?
But you need to be a little bit careful about installing. So I generally temporarily install and then I typically uninstall also. Okay, but
I think Siemens is bringing a rule. I don't know when it will be rolled out that all admin privileges will be taken out of your laptops. So
you will not be able to
install anything.
Yeah, so you can depend like Market Gurukul or charting. Charting also plays web-based things. See, what you have to be here aware of that there are a lot of tools also web-based available, and without installing the tool, basically, if you know about these technical things, you can see a lot of things and then take the decision. Many of the cases, for example, my broking agency Zerodha, they provide a very good web-based tool. You need not install the tool. Okay.
Okay.
Okay. So, for example, in the charting, there is one special advantage I shown you that you can create the filter. Okay. So typically the filters are very important here, and with that filter, uh, yeah, for example, cleaners. Not the screeners, I think the dashboard. Yes, dashboard. So here I have created the dashboard, okay, where I have created different rules. So basically, this is another tool, and when you run the tool, you will see that different stocks are, and it is a very dynamic in nature. It changes from time to time. So you can visit this Alchemal, and it is a very good stocks now to invest. You can see that it is rising, and then you can change the what do you call the period, for example, now. So you can see that also that 1 year. Okay. And the stock is a rising stocks, and it is typically beating the COVID. And it is almost day by day rising. So such tools, usage of the tools will make you more effective to stay in the stock market. So I have developed a checklist of the activities, and the checklist of the activities is typically the summary of all the things it should be in front of you. And whenever you are going to buy a stock, okay, you have to look into certain checklists, and it will guide you typically. So not that everything it is very difficult, but have, I mean, in your dashboard some checklist. So on the left side, I've kept some of the fundamental checklist. Very important to me is the return on equity. We should be more than 18%, and then annual earning. Okay, the last earning, the debt to equity ratio, the cash flow, the reserve. Okay, so these are the checklists through which I filter the companies. One of the important is that it should be also bought by many of the mutual fund companies. If it is not bought, only you people are interested or very few people are interested, the stock is not going to rise much. Similarly, on the technical analysis, I will do the CAGR of the individual stock at least once in a week. Okay, I will do the time series benchmarking for the 1 week, 2 week, 3 weeks, 3 months, and so on. I have shown this one. What we call this one. Okay, so 1 week, 2 week, 3 week, and then whatever is the top ones, it is going on. Okay, for example, now I could find that okay, granules, alembic pharma. These are the things which are going very strong. Okay, you can see they are on the topmost list. So I will start investing on this and then I can make money. So this is a good thing. And in the last many of the classes, we have learned all these techniques. And then based on that, typically you should decide to buy on a date of the buy and sell and based on the candlestick, not exactly by the signals. Whenever, so that's why I told also the candlestick pattern. Whenever something there is a reversal pattern, you should buy on that particular day. Okay. So yes.
Devanjan, one more doubt. Is there any tool where upon selecting a particular sector, all the companies falls on under that sector? What is how is the graph? Something is there in that sector, particular sector?
That's the thing. So I showed you that first of all, you have to know a particular stock, which sector it belongs to, correct?
Yeah.
And then that particular company, how good it is in that particular sector. Is it your question?
No, all companies belonging to that sector, who is doing good?
Who is doing good in the
Yeah.
technical fund? Who is doing bad in the fundamental fund? That fundamental part you can know from, for example, if you go to the screener, screener, I think, then you can know a little bit. Yeah, screener. Okay, for example, I will go RT Industries, a chemical. Okay. So it will give you some benchmark of the competitive companies. So you can do here the benchmark, okay, from this screener. Now regarding the technical, it cannot give you this particular side, but money control can give more or less technical part. Let me go to and then. Wait. Yeah. So money control, if you go for one, there is a sector-wise analysis. Okay. For example, here you see the chemical industry, the same thing. No, commodity chemicals, the chemicals industry. First, you have to know that under which chemicals. So here it gives this one. For example, we have seen the earth industries, correct? So earth industries, you have to go and search under which earth industries, correct? Okay, so it is showing sector chemicals. So you have to go here and then go to the sector chemicals. Sorry. I'll come back here and then I will go to the chemical sector. Ideally here, this should be there. I don't know why it is there, but maybe they have done the mistake. But if you compare this gives more or less a comparison, or else you have to build your own stock to do the comparison. Okay.
Okay.
Then you have to go to the particular indexes and the components of the indexes from the BSE. And then you have to do certain comparison. For example, if you do here, there are voltas and etc. And you can see that how is the growth compared to the others. For example, Johnson Control, it is growing quite well. That's why it is showing the green line. Okay. For example, the Amber Enterprises. So it shows 1 year, 9 months, 6 months, the same thing. Okay. So you have to do the comparison among that. Does it answer your question?
Yeah. Okay, Devanjan. And
Okay.
one more thing. Your Zerodha account provides a tool, a graph, which shows the graph, all those things. Does the HDFC Securities, because we have the account in the HDFC Securities, does the HDFC Securities also provide the tool such like Zerodha, something similar to that?
No, no, no. In fact, I used SDFC security account for more than 5, 6 years, and I got frustrated. Then one of my friends has shown the Zerodha. The Zerodha has got a lot of innovative approach. They have got a good research and development wing. In fact, the Zerodha office is very near to my house. It's just
Okay.
2 3 kilometers. I went there. I discussed even with the developers. Okay, and
Okay.
I watched this company for more than 2 years because it was a very small company. Then I saw that it's growing, growing, growing. They bought the separate land, and their approach was much, much more. And the one of the greatest advantage of Zerodha is that the brokerage money is exceptionally low.
Okay.
So your margin will be quite high in terms of the profit. And if you are doing the cash settlement, that means buying and selling after a few days, not on the same days, intraday they take, I think, 0.1% commission. But otherwise, in the cash settlement, almost is a free 1 rupee or something. Okay. So whereas the HDFC takes almost 0.68%. So in one of the classes I shown, no, I mean 0.7% means for the same buy, you add 0.7%, and if you want to sell, so 0.7 multiplied by 2 is 1.4%. So if the stock price does not go beyond 1.4%, it is useless to sell in the HDFC. Okay. In fact, I have calculated that in 1 year, I have paid just on the brokerage charges more than 25,000 rupees HDFC. So then I quit HDFC and then got into Zerodha. And Zerodha has got a developers community. If you are a developers community, they developed a set of the scripts, and that you can integrate. So I don't go into that. There's a separate blog of Zerodha usage. They develop a lot of scripts. So with the things, if you, you can really, improvise a lot of things. Okay.
Okay. Thanks.
So now, knowledge and continuous information, that is actually key thing. If you spend time on understanding the subject, I hope that after attending few classes, you have known something. And then you have to subscribe also to the company news. You have to read the good books on the stock market. It's essential. Nowadays, reading the book, I know that it is not many people's habit. They love to see the YouTube, but not reading the books. But there are some books at the international level. If you read the beautiful things, and I have noted that even if some people have commented something, 50 years back, it is still valid today because the psychology of the people across the world, of all the investors, is the same. Their pattern is the same. So it does not matter that when the book was written. Then you have to also see from time to time, not always, see the TV news channel, ET, CNBC, Bloomberg, all these things. To visit certain good websites from time to time. You have to read the stock newspaper at least daily once, or in the normal newspaper, there's a business review. So you have to keep aware of all the companies, whatever is happening. Especially, you have to be very, very careful about the bad news, because bad news will suddenly, I mean, the stock will fall like a, like a stream. Okay, suddenly. So you have to, keep your own diary where you have made the mistakes, how you have learned is very, very important. Those who do not document their own learning, they will do and keep on doing the same mistakes. They may not be aware of. They may think, okay, market is bad. But it is important for you to learn market is never bad. It is individual person or the investor who had made certain bad decision. And because of the bad decision, he has lost in the stock market. Okay, so I have come out with the 10 tips of the success. It may not be very essential things. So first is that invest regularly in small chunks. Do not invest in a big chunk over a period of time. Small. So whatever you are earning, like a salary, keep a portion of the salary and think that you have lost that money. Actually, you will not lose the money. It will save you in the future. And keep on investing. Okay. Then always do the fundamental analysis and the technical analysis before you go into any stock. Both are important. The sites like Vijay Malik I have shown, they're exceptionally good in the fundamental analysis. But the promoter of the site, Dr. Vijay Malik, who was basically a MBBS doctor, he turned into the investor. In his what he thinks is that technical analysis is absolute bullshit. I mean, you need not look at the technical analysis. I don't believe in that. If a stock passes through all the checklist, whatever I've seen earlier, shown earlier, both the fundamental analysis as well as the technical analysis, then only it is worth investing. And if any of the parameter falls down, the technical side or the fundamental side, either short term or long term, you immediately need to get out of that particular stock. So both are important. Okay. Do not invest a lot in one of the few companies. That means you're balancing in one company thing very good, say consider HDFC Bank, and you invest some 70% of your total portfolio value. No, never do that. You distribute the whole money with a set of companies. It can be maybe what do you call 15 companies, 20 companies, like a mutual fund. You should develop your mutual fund so that one company stock is falling down, your heart is not broken. Then you need to have a willingness and passion, and it needs to be consistent. If you're in the stock market, it has to be a long term. It is not like that suddenly after this training you got very much energized and then start investing. Okay. So you have to do it regularly. You have to be very, very quick in selling the stocks. Okay. And
Yeah.
it has, yes.
Dimension, one more question. Companies in the same sector or different sector?
I would prefer different sector, but you have to also market the sector. What I mean is the market. Sometimes, for example, now the pharma sector is going up, the chemical sector is going up, but the auto sector is falling down. Correct? Because nobody is now going to buy the auto. Okay. So now you have to get out of the auto market. You cannot now start investing in the auto market and hoping that the auto market will someday will come up. You do not know. Maybe after 2 years it will come up. Not now. So if you have money already invested in the auto market, get out of that money. So maybe all the down sectors, you can keep say 30% amount of the money, but the rest you shift it to the sectors which are coming out. So with the same amount, basically you have to balance your portfolio. Wherever it is going green, you have to divert that money. That is a fundamental thing. Never bother about the companies. Always bother about the money. Money is the sole guiding factor. You understand? So if something is going up and another thing is going down, why do you want to keep the money? Suppose today you have invested some 10,000 rupees in one of the auto companies, say Motherson Sumi or say even Maruti. I mean, Maruti is exceptionally good company, but now it is going through a bad phase. So you do not want to keep in Maruti now. You invest in other pharmaceuticals drug company. You sell it. Maybe Maruti have bought at a higher price, but with the loss, accepting that loss, you sell the money, invest the same money into the pharmaceuticals company. Few years back, 2 years back, 1 year back, pharmaceuticals companies were very bad shape. That time you should have come out with a pharmaceuticals company and then invest in another company. So that's how you have to juggle with the market. I mean, juggle with the money. So you have to continuously do the portfolio rebalancing, what we call it. Okay, that means shift the money from one sector to another sector, shift the money from the bad performer to the the good performance. So identify always the leaders and the laggers. This is very, very important. And this is a continuous activity. Do benchmarking among the companies. Identify who are the leaders and then who are the laggers. Always search for the good companies. It is not that, okay, your exercise is done. You have invested 15 companies. These 15 companies in your portfolio is not going to rule all the time. If there are better companies, and you have to continuously research that what is the better companies, which is the best. Now there's a new company which can be a new opportunity. Okay, and then you have to always compare with your older stock. If an older stock is not generating much return, throw away that stock and then give chance to the new companies. Okay, and read a lot of research paper I have shown you in that. Okay, this particular site. The research papers will give you very good information, but you have to take ultimately the decision. Do short term, mid term, and the long term analysis. I've shown you one of the technical things in the marketskinner.com. It gives very clearly what is the short term. If all the terms they are very good, then in green it is showing, then you can invest this stock. So some of the very important point, and then we'll go into the report. We don't have much time. Invest only in the surplus. No guaranteed return, but start with the small. Rakesh Jhunjhunwala started with the 5,000 rupees, and he is now the owner of more than 10,000 crores. The last point is the discipline. Okay? And then there are some reference site, and then I would say you start reading the good books. First good book, I would say you can purchase from the Amazon. It's exceptionally very good. How to avoid loss consistently in the stock market by Prasenjit Pal. This is the second one. It is the all-time favorite, Intelligent Investor by Benjamin Graham, and this is the Bible of Warren Buffett. Okay. The third one for the candlesticks, this is the best book by Steve Nelson. How to make money in the stock. I have a soft copy of this. If you want, then I can share. Then William O'Neill, One Up on the Wall Street by Peter Lynch is also one of the exceptional books. For the Ichimoku, there's one Indian who has written, but he's staying in USA. He has published the book from USA. It is one of the most excellent book. But there's one PPT slide also in the internet that also keeps very good. And then this is the physical book, the last one, and this book has taught me a lot. A very thin book, but an exceptionally good book. Okay, now here is the end. Now, what I request you, then we will open.
Can I ask you a question, Debanjan?
Yes. Yeah.
So that the fundamental and technical analysis, you said both are important, and but that does it apply to for short-term trading as well, or it's only for long-term trading?
I would say even for the short-term trading, you have to look at the fundamental analysis. The reason is that suppose you fall, suppose you forget, suppose you are handling with some 10 stocks, the 10 stocks you are trying to make money with this thing, and you fall asleep, you forget to track that. So ultimately, a good fundamental company will save you, because momentarily you may lose money, but if you stay on the stocks for a longer duration time, a fundamentally good stocks, it will pay you ultimately. That's my advice. Okay. So play only the stocks. Suppose number of the stocks is some 25. Out of that, suppose 6 or 7 are fundamentally exceptionally good. Play on the technical part on those 6 and 7 stocks, and the rest stocks you get out of it. Even if there is a good opportunity to buy, because you will be only making the rest of the stocks as a risky. It is possible to make money. Obviously, there's no doubt about that. Whenever you are playing technically and for a very short time, it is possible to make money, but the guarantee, I mean, the reliability of those stocks is very poor. That's my advice. Does it answer your question?
Yes. So, and the stop loss order you put in both cases, regardless whether it's a long term or short term, or you let long term stock go down more than a short term investment stock.
Generally, long term, only thing the band of the stop loss I increase may not be is a 5 to 6%. Sometimes I set also 12% from the peak value. Okay. Long term. But for the short term stocks, the band is quite low. That means I said typically is a 5 to 6%. More than that, I will not have any loss. Okay.
Thank you. Thank you.
Okay.
Sir, just following up on the previous question.
Yeah.
Sir, like, what is your take on stocks like Ruchi Soya and Alok Textiles? It is like the market, they are like increasing 5% on a daily basis.
Okay. You can go for that, but I have to do the complete what you call fundamental and as well as technical analysis, which may not be the scope of this training session. Maybe in the teams we will discuss it, okay, in the same thing. And then I have to spend some time on that. Okay, it is not that immediately we can see that. So shall we do it offline? Maybe after these things, you pose the same question in the same Teams forum.
Okay.
Okay. Then
Okay.
we will with the individual stocks.
Yes, sir.
Okay, now let me go through a squeeze. I would request you, there is a site here, okay? Maybe I will copy and paste. It's a very long thing. And all of you now try to access this. I will paste in the chat. Okay. Now, can you access the link, everybody? Just try. Or I will paste the long link also. Microsoft Forms. Let me know whether you are able to access.
Which meeting, which chat window, sir? In this chat window, I did not get the link.
Yeah, I didn't see the link as well.
I did not press meeting chat. Meeting chat.
You have not sent it. You just pasted it, you have not sent.
I said it. Just a minute.
Yeah, we see it in the. Okay. It's sending. It's not gone yet. Yeah.
It is now signed.
Now it can.
I think. Now I think you have. Are you able to see that? There's a short link.
Yes.
Yeah,
both the links.
Are you able to access? Let
Yeah.
me know. Able to access?
Okay.
Yes.
Yeah, that is, it's coming now.
Okay. So it will ask you first fill up your email address. Just fill up.
Devanjan, there's a question number 3. Without any reference, it is asking which option is the best suitable for buy.
Wait. I have not started that. Okay. So I will show you on the. You are able to see my screen, correct?
Yes.
Okay. Now the first question. You will see the question 1. When you are through, we'll go to the question 2. You are through? Shall I go to the next question?
Yep.
Yes. Yeah.
Okay. Question 2.
Devanjan, you have to move the slide.
I did not move the slide. You are not able to see my screen?
Now it is loaded. The second page is loaded.
Okay. I've only covered the technical analysis part. In the fundamental analysis, maybe we can do later. There's only few questions.
Let's go to next.
Everybody's through? We'll go to the next. Question 3. Done?
Yeah.
Okay. Let me go to the fourth question. Sorry, did I go to the fourth question? What is missing? Just a minute. Outcomes. I think this copy and paste. Hold on. I'll unshare the screen, okay? Yeah. Sorry, let me share again. Able to see my screen?
This is again question 3.
Yes.
Okay. So this is the question 4.
Without the other indicators, this question is a bit tricky.
So that's why.
Where is the candle A? Is it in the previous slide?
This is the standalone site. So you can consider for answer number 4. But one thing I have not shown, but you have to imagine in your mind. And the signal is very, very clear.
Yes.
You have learned this technique anyway.
So can we see the question number 1 once again? What was the first question?
Yeah, I'll go back. Has everybody finished? Or let me go to the one. This is the question 1.
Yes. 4 is done.
Done?
Yes, sir.
Okay, last question.
Sir, which is A and which is B?
It is on the top, it is written, no? It is opportunity to invest. It is risky to invest.
Okay, so the question is like on the current chart, what is the correct one?
Yes, yes. So whether A is true, that means A means it is opportunity to invest. The second is B is true, whether it is risky to invest. The number 3 is the price cannot be predicted. I mean, you cannot really decide whether it is opportunity or risky. Okay. Number 4 is that you have to see other signals. Done? Very easy question, no?
They're not taking it.
The clue to this particular question, I don't know whether anyone has noted, I should not give hint, is at the side, the price is written. Are you able to see the price?
Yeah.
Yes.
Okay. That is the clue to the question.
Only for this question you have the price indicated, Devanjan. For everything else, the line chart.
Because in one of the past session, I have told you about one rule. And this price will guide you. So are you through with the question?
Yes.
Yep.
Yes.
Okay, now let me see what is the result.
Shall we submit?
Yeah, definitely. Otherwise, I cannot see the result. All of you submit, and then we'll go to the answers section. I initially thought design more questions. Unfortunately, because of the time constraint, I could not invest much time. But from this question, you will learn, I hope. Has everyone submitted?
Yes.
Yes.
Yep.
Okay. Let me go through. Okay. Nine responses. Okay. Good. So is it possible that I can download? Yes. Okay. Good. So now we can see that for the question number 2 is very easy for all. Okay. Most of the people. But the other questions we can see some variety. Okay. Now let's go to the answer. Okay. So I will go here. Now let's look into the answer. Question 1, correct? So let's look into this thing. So let's look in the, sorry. Yes. So in the question 1 actually, and the answer is 1. So we have shown in the question only this section. And then I have extended it so you can see the further. So now you can see the price is increasing. Okay. And what was your these things? Now you can see the C is the best option. Why? First of all, this is based on the Ichimoku signal. You can see that this A is wrong because now price is going below the cloud. Okay. And also both the lines, the K line, okay, and the T line, they are above the price. So definitely it is a downtrend signal. You must not buy that. Because our question was, which is the most best suitable for the buy? So A is the wrong answer. Now B, you can see that it is going above the cloud, but it is not the best possible time to buy. Why? Because the K line, you will see it is going flat here. So I have also taught in the past, whenever the K line is the flat, you should not buy because the K lines, the flat lines will attract the price like a magnet. Go back to your earlier lesson. And that's why there was a temporary fall. So this is not a right time to buy. But then you can see that now K line is going a little bit above. And also it has gone out of the cloud. And the cloud was quite thin cloud. So this is the best possible time to buy. And you are very sure there is a 1, 2, almost 3 candlesticks above. And then you can see that the graph of the K line is also what you call is angle wise. This is C is the best option. Let's go to the question 2. Question 2 is which is the safest point to buy? A, B, C. Whether this one, this one, this one. Now let's go for the answer. The C is the answer. Why? The point A you cannot go. As you can see, the 20-day and the 50-day moving average was crossing down. So this is actually a time for selling. The B, my question was the safest point. B is, many people will try to enter into the B based on the MACD and the signal. Okay, I mentioned earlier is a MACD and the signal. So the MACD and the signal, they will be able to buy, but this is not a safest buy. The safest buy is that again there was a crossover, and the crossover was point C. From there, obviously from the B to C, there's a lot of gain, but it is not the safest point. The safest point is the C, where you can buy is the C point. Yes, so C is the answer. Do you have any question? Did you understand?
Yes.
Okay. Let's go question
Sir,
3.
but in C, okay, in answer Q, but at point C, the stock is not increasing much, right?
No, it will increase further, but it is the safest. Obviously, the B is that the gain will be more, but it is not the safest. It can happen that the stock is going up because it is a negative. You can see that MACD and signal is a negative. Whenever the signal is more than 0, it is much more safer. So actually, it may be safer even before the points here. The points we have taken because there is a crossover. So the trend is very, very now apparent that it is going to increase further. Okay. Next is that your answer question 3. Okay. Now here the price will further fall down, price will rise. Okay. Price cannot be predicted. What do you predict here? On what basis? The volume or this 20 win? The answer is here very clear. It is an inverted hammer, the point A. So you will see like this. The question was like that. The answer is like this. So you see the price is now going to increase. Why it is going to increase? Because there is an inverted hammer of the candle. It is of the single candlesticks pattern. Remember that? Let me go back to the slide so that you will understand. Yeah, in this slides we have seen that either this one or this one. This is the sudden reversal of the pattern change. The same thing we have come here, that the price is now going to have a direction change because of the pattern of the candlesticks. It looks like an inverted hammer. Okay, clear? Now let's go to the question number 4. This is the one. That will be tricky, correct? Because you do not have any other indication. So you have one indication. Is that this is the indication? You have to draw it mentally. And you can see this is called your support line. So you have to draw the support line, and you will see the first time the candle is falling below the support line. I think someone can unmute. Okay. So you have to draw a line and the price is falling, and then there is also sudden gap of the candle, and then finally the candle is falling behind the support line. So it has broken the support line and the price is going to fall further. Okay, so 1 is true. Now go to the next answer, this one. Okay. The answer is B is true. It's very risky because I have shown one thing where the price over a period of time has fallen more than 50%, 430 to jump to how much? 70 rupees. So it is what you call almost 400, more than 400% fall. No good stock over a period of time will fall by 400%. So only one mistake I have done, I should have shown you the timeline. Maybe I will correct it. Okay, showing the timeline. So it is, I think, what you call Tata Power stocks or Tata Motor stocks. You'll see So the price, you may think, I mean, many investors may think it is a very good opportunity to buy, but actually it is not, because it's a long-term sustained way, and the price has fallen a lot of the things.
But isn't it uptrending?
It is uptrending, you can see.
And also the parabolic SAR is also favor of buy, isn't it?
Yeah. Short term, it is okay, but I would say it is very risky to invest, not to trade. You can go for trading, but for the investment purpose, never pick up this stock. Okay, because this stock will be a killer. There is one rule I think I have presented, no? I don't remember something I have. Something. Someone mentioned that a stock which is more than falling the greater than 50%, you should avoid the stocks. Okay. You should basically avoid. You should never buy that stock. In earlier session, I think I mentioned. Okay. So that's it. I think we have exceeded by more than 10 minutes and end of this session. And maybe if you want to have any discussion session, then we will continue next week. Otherwise, we'll end. If you have different questions, if you want to discuss with the individual stocks, we can do the quick analysis inside the forum. Maybe you can go back and identify some stocks and then we can discuss it. Or else this will be the last session. It depends upon you. If you are interested, we can continue.
Devajan, we should have one session or two sessions next weekends for us to evaluate our personal experience of investing after learning from here.
Yeah, that's good. So,
probably we can bring up some stocks which we have identified, and then we can just one or two we can discuss it in our next sessions.
Okay, so if you want, then either next week or we can maybe after 2 weeks, as you wish.
We can have next week, Devajan.
Okay, thank
Friday
you.
evenings are reserved for this, so we can continue.
Okay, fine then. Okay, so did you like today's session?
Very much.
Yeah.
Okay, thank you. I hope
Thank
you
you,
have learned.
Devajan.
Yeah, thank
Thanks,
you.
Devaya.
Thank you, Dipanjan.
Okay,
Bye.
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 Thank you. Bye.